Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on the 3 outside down reversal candlesticks pattern, the 3 outside down, and then show you some real world examples. So right here, it doesn't show a picture of the 3 outside down. This is the 3 outside up. So the 3 outside up is a candlestick pattern where the market is in a downtrend. First candle is black or red. Second candle is white or green with a long body, right? And fully contains the first candle. And the third candle is white or green with a higher close than the second candle right here. Very important to note, this 2 candlestick pattern is super important to be aware of. That's a bullish engulfing candle set, right? Bullish engulfing shows a potential reversal. So before that third candlestick even happened on the 3 outside up, be aware of the bullish engulfing to show that this might be potentially signifying a reversal, right? Or signaling a reversal. So the 3 outside down pattern is just the opposite of this. The market is in an uptrend. The first candle is white or green. The second candle is black or red that fully contains the first candle. And then the third candle is black or red with a close lower than the second candle down here. So that would be a bearish engulfing. If this is black or red and this is green, right? Bearish engulfing. Price is going to fall, potentially. That's where it's signaling a potential reversal to the downside. So let's look at several different 3 outside down patterns. I get confused with all these patterns. Sometimes there's 3 inside up, 3 inside down, 3 outside up, 3 outside down. So this is 3 outside down, right? So let's go take a look at several real world examples. Ford. This wasn't really in an uptrend per se. This is kind of trading sideways at the moving average lines. Very important. Again, price, the more it gets overextended, either way, whether it's overbought or oversold, it's like a rubber band. It wants to snap back to moving average lines. Now, many times, again, when price is at moving average lines, you can see all of this indecision. This is so difficult to trade a stock like this. It needs to eventually choose a direction so you could either ride it up or down, right? So, as you can see here, this is a major warning. Before this even happened, this right here was a gigantic warning sign that said, big bearish candle enveloping kind of a smaller, spinning topish kind of candle right over here, right above the moving average lines. And then this third candle confirmed it, right? Closed below the second. So bearish engulfing right here, these 2 candles. The third closed below the second, 3 outside down. And then this obviously just completely tapped. So this is a really nice looking 3 outside down pattern. Let's look at several other examples here because I like repetition and I like to show you guys diversity on charts. 3 outside down. Let's move over here. So price was a little bit overextended. It was kind of right on the RSI, broaching a little bit higher, right? You have this red candlestick here engulfing this green one. Not, it's not the perfect bearish engulfing, but hey, it's contained within inside this real body of this red candlestick. Third one closed right below it. Look, no coincidence, all happening right around these moving average lines, right? And then you get some dojis going on over here. And then it kind of just messes around. So it's a potential reversal pattern. This is your warning right here. Once that red candle envelops it, that's a potential look outside. We're looking to potentially reverse and go to the downside. Let's take a look at ADI, another one that was trading sideways. Bigger red engulfing candle, engulfing this green one right here, that spinning top. And then you can see third candle closed below, right? And so that's a 3 outside down. Again, happening all around these moving average lines. So incredibly important to be aware of. Let's take a look at Goldman Sachs. This one right here was moving up, right? Kind of getting at a peak level. Again, be aware of support and resistance. It was just breaking above that resistance candle right over here, kind of this double top area. Broke above. Boom, this big red candle came in and engulfed this green one, and the third candle closed below it, right? So again, when you see this big red candlestick engulfing that one, that's something to be, to look out, be very, very careful of, right? Early warning signal. Netflix right here. Price really overextended over here, wants to naturally gravitate back. Big red candlestick, kind of covering that spinning top or doji candle. Third candle closed right below, teetering around these EMAs, and then kind of bounced around, got a little crazy wacky stuff going on there. But again, reversal pattern. You can see right here, this is kind of an evening star pattern. Green candlestick, doji or spinning top up top, and then boom, third candlestick fell down all around these moving average lines. See, reversal pattern at moving average lines, reversal pattern far away from moving average lines, right? Price wants to snap back to those moving average lines like a rubber band. SMTC, you can see over here, RSI overextended. If you zoom in again over here, kind of at a top, you got kind of that spinning top, this bigger red candle engulfed it over here. This third candle fell below it. This is your warning sign. This is confirmation. Now you got to watch out what's going on here. Bounce, bounce, boom, fail, right? Doesn't mean it's always going to keep failing, but you got to watch the other patterns that form. This is kind of like a head, kind of a left shoulder-ish area up here, kind of a right shoulder here, a little bit of a fake out, and then it failed right below the neckline of the head and shoulders. Again, if you're not sure of these patterns, take our course. We go through all of these patterns pretty much in our course, and they're all important to be aware of. 3 outside down pattern here, right kind of trading sideways, kind of almost like a double top pattern. You can see a top here, kind of failed again over here, and then you have almost like a double top, and then this big red candle, kind of bigger, not huge, kind of enveloping the spinning tops indecision. Third red candle failed down here, down below the moving average lines, and then obviously the moving average lines crossed over and started to fail. Let's take a look at one more, JBL. If you zoom in over here, look at this one right here. Big red candle, kind of enveloping this green one. The green one is still kind of a bigger candle, but this is a bigger red one, enveloped it. Third one failed, crossovers down on the moving average lines, and price just kind of entangled, just fell. But again, you can see price when it gets down and far away from the moving average line, or far away from the moving average lines, it wants to bounce back up. But then there's other ones like, here's the 200 SMA. You had a couple bounces off of that to push it back up, right? Many times it'll fail, many times it'll push back up. Moving average lines, huge support and resistance areas, but they don't matter unless you know candlesticks first, because you have to know how candlesticks work in relation to the moving average lines, right?